Hey, welcome to the next weekly review, which is number 22, 21. And this is my week, so I had several losers, which, by the way, are not exactly the part of the system, so a bit of emotional trades, or maybe just too early. And then a couple of good winners, some break evens, and I guess if I was risking the same amount every time, so let me check. Even if I would risk the same amount every time, it would still be a profitable week. And there were several losers that could be easily avoided. As you can see in this needed column, they are like 50-50 trades. One trade was not needed. Some of these were not needed. But it happened so that on some losers I risked actually a bit less, and then on winners I over risked, and for me over risk is 0.4%, and because of that overall I'm up a bit more than 1% for a week, which is for me is a good result. So why I'm telling about this is because, you know, sometimes maybe you skipped some reviews, or I don't know, and you see this kind of a week when you have break evens, 2 winners and 6 losers, and you think that it's an awful week, but in fact it's profitable week. 2 weeks before were also profitable, and overall I'm up on the account. So you see, it's really important to understand that like win rate does not equal profitability. So high win rate will not guarantee you profitability, and at the same time low win rate can give you profitability. Yeah. And let's move on and see some trades, but overall it was good. I was playing a bit with fractal structure, with internal structure, got emotional again, just because of my outside life, you know. I'm like frustrated with some people and so on and so on, and it affects my trading, of course, and I'm keeping it in the journal. It's not that bad. It's not that bad like it was 1 month or so ago. 1 week I had like real bad week. But overall it's going good, and looking forward to my evaluation, which I'm going through right now, my second evaluation with City Traders Imperium, which is going good, and I'm up 4% on it. So they have no time limit, so I hope I will be able to get it in maybe a couple of months. So let's see. So a lot of trades for this week were taken on USD GPY. All of them were taken to the long side. Bias is absolutely the same like from previous weeks, so I even don't know if I need to repeat it. But on weekly we have a reaccumulation model. Why? Because we have a market that is moving up, and then down, and now is breaking up on internal structure basis. So you can see up, break down. So this is a model of reaccumulation. On the daily, if we see this part of the chart, we can say that this is an uptrend after reaccumulation, after this up, down, up, or this is an accumulation, and the same way this could be treated as accumulation. You have back and forth, and the recent break up. So we are not only talking about range confluences, but we are also talking about model confluences, and a lot of models is telling us the bullishness. And then so let me play at the beginning of the week. So at the beginning of the previous week I had approximately these two zones, okay, something here, expecting either continuation or reaccumulation, the same pattern like we have on weekly. So why reaccumulation? Yeah, because the market is just moving up, and then can do one move down to continue. So again, you see a lot of bullish confluences both on the range basis, so weekly up, daily up, 4 hours up, 1 hour up, and so on and so on. And I was just looking for my confirmations. And first range I was looking at is this 1 hour, 2 hour range. And when the market created a pullback, I basically was going after this impulse, So this impulse creates a lot of confluence. So during this time I had confluence on 15 minute, on 1 hour, 4 hour, daily, weekly, and models of reaccumulation and accumulation playing in my side. The move is pretty clear, the zone is unmitigated, so the market overall is bullish. Even some fundamentals were telling to the favor of bullishness, so a lot of confluences. But again, if you want to simplify it, then you have just a confluence of different time frames plus some models of accumulation and reaccumulation. And this was the first time I was looking at, so relatively overextended, a possible part of redistribution. So what I mean by that is, if we look at this part of 15 minute, then we have a move down, 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 and one move up. So what is this model in itself? If we just limit ourselves to this 15-minute range, you have down, 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 up. What is this model? This is a redistribution, yeah. So relatively bearish market, even with the overall higher time frame bullish context. So I was making a note, and I was aware that this move can be a redistribution to go even lower, because of course, even with the overall bullishness, we have a relatively overextended market with no reaccumulation in a long time. Even if we go to here, we can see that we had like 1, 2, so this is a reaccumulation, then 1, 2, 3, 4, this is reaccumulation. Okay, 1, 2, 3, 4. So we have 4 structural shifts with a probability of reaccumulation, something like this, or like this to happen here. And by the way, this is exactly what happened during the week. So I was trying to long from this zone, but the market did this. And right now it's here looking to take these highs. So again, this week I'm bullish on USD GPY. What was the entry idea here is that we have this 15 minutes impulse, and then 5-minute impulse here, and this zone. So the market came back into the zone pretty aggressively, started to reject it. And what do we have? Oh, so there was no entry there. And this one is forward tested, don't want to take due to low volume session, and much better to our zone below. So what I mean by that is that we have this to our zone below, and during this time it's not New York, it's like the middle of London. So usually during this session the trading is not fast enough, and so I don't know. But at the same time, oh yeah, BE manual here. So, but at the same time, we have a tap into refined 1 hour zone, and I decided to take one attempt here in the end. So this was manual BE because the market just didn't show the break to the upside. Market just went up and then started to range, so decided to close at BE. And again, the basis for entry is 15-minute break, tap into the zone, and started to move up almost with a fake candle. So you can have this basis. So now this one, only fractal break to the upside, better zone to mitigate below, New York opens in 30-minute. Model on entry time frame is, as you can see here, is what? Is it accumulation to go bullish? Is it reaccumulation to go bullish? Yeah, or is it bearish model of redistribution, continuous downtrend, and even if we have one shift to the upside, will it be a bullish sign? No. So this trade is an example of low quality trade, of a trade that could be easily avoided. Yeah, so I have my notice that this is a distribution and redistribution model overall. Now we have a tap into main zone from 2 hours, from 1 hour, and I decided to work with it. So again, what is the problem already from with these entries? Again, they are against the immediate wave structure, the immediate models, because if you see this pullback, yes, of course, it can be treated as a possible accumulation. Why? Because we have back and forth, and now if we will have one shift to the upside, it could be treated like an classical accumulation. Yeah, what is an accumulation in terms of models? It's back and forth and then shift to the upside. But one impulse and this model could be changed. Yeah, so, and specifically here we have this vertical distribution, red distribution, and this is an obviously early entry, which could work, especially that we have this refined zone, so the zone is not that big, invalidation zone is not that big, but this specific entry is not that good. It's not that good, so we have a tap. And still redistribution, so this is, I'm talking to myself, yes, still redistribution, price action is pretty messy, middle time frames are not with me, and by middle time frames I mean 15 minutes, so you see they are moving down, 30 minutes, so these are kind of entries I'm trying to get rid of, but still I'm working with them, unfortunately, and I'm receiving some not very high quality trades. So later entries, better entries, this is what I say, and here I move to BE, and because of I changed the management, as you remember from the previous week, and now I'm waiting for 5R and then start to manage more aggressively. This is why it's a break even. And here again, still too early for a possible move up. 5-15 minutes is recently redistribution happening. So again, the same way, it's just too early entry. Just remember, if you're trying to get an early entry, be prepared to be stopped out like really, really a lot. So I entered here with this internal structure shift, mitigation of this zone, and start of the move up. And then closed manually somewhere here at break even because the market didn't show the movement I want, and because it's already almost late New York. So basically that was it. And then Asia came, so liquidated this low as I saw it at the time and started a move up. This example was an example just so I was looking at this price action here, but I didn't enter it, so I don't remember the exact reason why, but this is a forward tested trade. And what we have here is just a market that was moving down and then made one shift to the upside, second shift to the upside, and a mitigation of a zone with the liquidation of intermediate low. And then on a buy stop it was possible to enter. Price went to 5R, I guess. Yeah, it went to 5R, and then you can decide either you start to trail like aggressively or just close it all, or you trail to here and wait for one more break, and so on. This one was actually an entry, so this forward tested. This one was an entry. So what was the rationale? For it, we had this zone from 2 hours, from 1 hour, actually from 2 hours. Yeah, we have this zone, we have some refinements from lower time frame there, we absorbed it. Yeah, so we didn't break it, actually started to move up, and on 1 minute we already created a really nice uptrend, as you can see, with a lot of shifts to the upside, some reaccumulations happening here, and then a good move to the upside, you know. And then we just moved here and I entered, and this is just a normal loss for me, to be honest, so it could easily work out. Now the market moved down and then started to move up again, and I entered here to be stopped out right away. Yeah, then the market continued up, entered here again, and then entered from here, on a basis. So again, these entries are just like really weird ones, but this one is quite okay. So we have a pretty clear internal structure, unmitigated zone, overall really bullish market. And just when it stopped and started to move up, I entered after this candle, and then the market just went up like this. I closed 90% at 5R and then started to trail. Yeah, I wanted to start to trail after this break, but it never happened. So everything else just stopped out here. So this was a trade. And then the market went to the downside. As you can see, this local distribution, red distribution continued and tapped into this zone from 4 hours, so performing reaccumulation on the higher time frames, and then started to move up. And that's all. I guess I didn't have any trades then, but let's see how the market developed. So it just showed this local possible accumulation, yeah, back and forth with a move to the upside, mitigation of this zone, and continuation to the upside with some entry possibilities here, and let's see how it went. Yeah, and then here, and maybe now I'm looking with this alert to enter here to the bullish side. And then the second pair I was trading this week is, yeah, so it was Euro USD. Quick analysis, redistribution from weekly, possible redistribution. So 50-50 from weekly. On daily, it was moving up, performed this reaccumulation here, started to move up, and now is moving down. So again, it's possible at this time to have a different biases from higher time frames, but at this specific trades I took, so I had this zone that was left unmitigated as a refinement from this overall up move. Okay, so from this overall up move, and I was expecting some reaction from there. So when the market tapped into the zone and on 1 hour it showed this break to the upside and then mitigation of the zone on 1 hour, it was possible to suggest that even if the market wants to go down, it seems that it is going for this redistribution from this overall like really long downtrend with no clear redistributions. And at this point, I had two options: either to wait for a reshift to the downside or to try to become short-term bullish on the market. And then if you can see on 30 minutes, on 15 minutes, on 30 minutes, if we take the recent chunk of price action, what we have is back and forth, so up and down, up and down, up and down, with the recent move up, pretty clear move and clear mitigation, which could be treated as accumulation on 15 minutes. And by the way, I had one loser here trying to follow the overall downtrend, which basically failed. And again, the session is not optimal, so it's just a normal loser. Will not touch it too much today. And then 5 minutes, what we see is that again we moved back and forth, and then started to break to the upside, broke to the upside several times, broke to the downside. So what is this model? Up, 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 downside, reaccumulation, and then continued the up move. So we didn't start the down move to turn it all into redistribution, but instead we continued to the upside. So remember, this is a move from 15 minutes, mitigation of clear zone on 15 minutes, and then on 5 minutes, on 1 minute, we had this. So if we look at recent price action on 1 minute, we see pretty clear picture that the market at this point started to move up, reaccumulation, deeper reaccumulation here, and then rebroke to the upside with a really clear move. Yes, it is inside structure, but this impulse itself is relatively overextended to the in relation to previous impulses, and the inside structure is really clear. So we have two impulsive candles, a clear unmitigated zone. So for me, it was good enough to try to enter. Unfortunately, I was not at my place during management time, so when the market went somewhere here, so in around 2 hours, I closed 80%, and then started to wait for 5 hours to hit. When 5 hours hit, I started to trail with this low, and then so with this low, and then when it broke to the upside, because it was the end of the day, I basically decided either close here or trail to here. I trailed to this low, and basically the market just failed. Then it's a roll over Asia. It went even higher next day, and then failed on NFP release, and is now moving down in accordance again with the current 4 hours, daily, and so on after redistribution. So again, we'll look for some bearishness, and as you can see, we had this clear shift on London Open, which could work, and now performed redistribution. We'll look to short it during this week already. Yeah, so this was my week, and I see you in the next one.